Are you a real estate investor looking to elevate your income, freedom, and lifestyle? If so, optimize your daily performance by downloading our free guide, Raising the Bar, 5 Steps to Elevate Your Habits at elevatepod.com. In this guide, created by yours truly, you'll learn why you do what you do, how to easily institute cues in your environment to trigger desired behavior, directly applicable steps to create a fulfilling future, and much more. Get your free copy now at elevatepod.com and kickstart your new habits today. Your future self will thank you.
Welcome to Elevate, the masterclass where we dissect the elements of exceptional achievement and lifestyle design with a focus on personal growth and real estate investing. Now, here's your host, Tyler Chesser.
Elevate Nation, welcome back. This is Tyler Chesser. I'm so thankful to have you here. And wow, I'm blessed and grateful to be sitting down with Chris Larsen today. You're going to learn the secrets of the ultra rich today. You're going to learn how to think bigger, how to go bigger, how to systematize, iterate, maximize your real estate investing strategy based on what's happening now, based on what may happen in the future. You're going to also learn about where we might be in the market cycle and what to anticipate here over the coming 4, 5, 6 years, maybe 10 years. You're going to learn about really some high level anticipation in terms of migration trends, demographics, how that might relate to your own growth in your real estate portfolio, whether you're a passive investor, whether you're an active investor, whether you're both, right? Or whether you desire to be one or both of those. And this is super valuable. If you want to be financially free, this episode is for you. If you want to be financially independent, if you want to be financially extremely strong, today's episode is for you because we're going big. We're taking things to the next level with Chris Larsen today. And Elevate Podcast is all about mindset, mind expansion, and personal development for high-performing real estate investors. I'm your host, Tyler Chesser, and I'm a professional real estate investor and high-performance coach. It is my job to decode the stories, habits, and multifaceted expertise of world-class investors and other experts to help you elevate your performance and lifestyle. Are you ready to take it to another level? It is time. Let's raise the bar together. And if you are here, you know what I'm going to ask you next. Pay the fee. The fee is pay it forward. Share this episode with someone else. If you've already done that before, thank you. I'm asking you to do that again. Please pay this episode forward. Grab the link, send it in a text message, share it on social media, share it in an email, whatever you need to do to pay it forward. If you've already done that before, we just ask that you do that again to someone else. The only way that we can grow this podcast is if you introduce us to other people. And the only way that we can continue to bring on amazing guests, amazing content is if we continue to grow. And so with all that said, I just want to thank you from the bottom of my heart for being here and also paying it forward. Also give us a rating, a review, subscribe or follow Elevate Podcast on wherever it is that you listen to podcasts. It's all very important to us. It's so important. And I want to continue to pour into you. And we're going to continue to do that. I also want your feedback. If you can shoot me an email at info@elevatepod.com. Let me know. What do you like? What do you love? What do you dislike? What do you hate? What do you want more of from Elevate Podcast? I want you to own the future of this podcast. So give me some feedback. Send me an email at info@elevatepod.com or send me a DM on Instagram @elevatepod. With all that said, I want to introduce you to Chris Larsen, who is the founder and managing partner of Next Level Income. Chris has been investing in and managing real estate for over 20 years. While still a college student, he bought his first rental property at age 21. You're also going to learn about that process and really how he got started and what he did to iterate from that today. From there, Chris expanded into development, private lending, buying distressed debt, as well as commercial offices, and ultimately syndicating multifamily properties. He began syndicating deals in 2016 and has been actively involved in over $400 million of real estate acquisitions. Chris is passionate about helping investors become financially independent. So without further ado, please welcome to the show, Chris Larsen. Chris Larsen, welcome to Elevate, my friend. How are you?
Tyler, I'm excited to be here, man. It's been, I thought we never finished just chatting in the beginning of the show. This is awesome. I'm fired up.
I'm like, man, if you send me another link, this could be another 15 minutes. I don't know what's going to happen, but we did just become best friends before the episode. So that's all the listeners need to know because we're going to have a lot of fun today. I'm excited about it. Chris, before we dive into really the meat of the discussion, if you were to describe yourself in the way that your friends, family, people that know you best, how would they describe Chris Larsen?
Crazy. Crazy.
Okay,
I think people wonder why I do what I do. And like my neighbor, she's like, so let me get this straight. You don't have to work anymore and you're doing all this stuff. Like what, like, couldn't you just like, that's just not me, man. I was talking to somebody about, I raced bikes for like 20 years and it's, I was talking to one of my coaching clients yesterday. I worked in the medical device field. So does this client. And it's crazy. Like you work 60, 80, 100-hour weeks. And I said, look, man, he's looking at maybe a change. And I said, look, I said, you could take my advice. I said, but I race bicycles. Like that's what I enjoy doing for fun. It's just like pure suffering. I said, so I'm just kind of built and I don't mind doing things that others don't want to do. It gives me pleasure to say, hey, you know what? Like I can do that. I've done that. That's kind of what I look to do for fun. Do things like raft down the Grand Canyon and row my boat 226 miles, for vacation. So
it's like you're built for suffering. You think that's become a commonality?
I don't mind it. I don't mind working for an outcome. Let's put it that way.
Yeah. It hasn't always been that way, I would imagine, right?
I have always had this like kind of future focus, Tyler, and that is also kind of the curse, right? Which is I've had to learn to live in the moment and enjoy life more and dial it back and say, okay, like my kids aren't going to be 10 for the rest of their lives. We need to do things like go and play some ping pong this evening instead of, record another podcast or write another chapter of the book or, go look at another deal.
Yeah, I love that. And just so the listeners know, like what we're doing right now stands between us and the ping pong game, which is happening here very shortly. So we're going to try to play a little ping pong today. But Chris, talk to us a little bit about your background, your upbringing. Yeah. I know that obviously you got a background in biomechanical engineering, also medical device industry. But prior to that, I mean, give us a sense of what life was like growing up and so forth.
Yeah. Yeah. So we live in Asheville, North Carolina now. Wonderful little town. Love North Carolina. Love the city we live in. Love the mountains. But grew up off the Chesapeake Bay in between Annapolis and Baltimore. Most of my mother's family is from the Baltimore area. My father died, and I talk about this in my book, which I'm happy to, if you're listening today, I'll share a copy with you and tell you, hey, you can get that by going to our website. But my father died when I was 5. And, so I grew up with my mother remarried, my stepfather. And it was a very humble, upbringing, straight middle class. But I was very fortunate that my mother kept us in a very good school district. She, taught us a really good work ethic. I think I was blessed with some intellect. I always did well on standardized tests and enjoyed math. And I think I was mentioned to you before the show. I'm like a multi-level nerd. I was on the math team. I was in the band. I went to band camp. I was the ping pong champ of the class. Like these are like things that like the super nerd does, right? Like I wasn't,
Are you going to start telling us that one time at band camp stories here, or what are we?
I'm not. I don't know if it's PG or where this podcast falls, but I'll leave it to the listener's imagination, if you will. But yeah, so that was kind of my life. And then I found cycling. And for this person that was kind of an outlier, and didn't quite fit in any one specific area. When I was 13, I started riding my bike a lot. When I was 14, I started racing my bike. And I was like, wow, like this is like what I'm going to do. 15, I was state champ, went to the national championships the next year, went to the junior Olympics, stayed at the Olympic Training Center the year after that, raced into college. And that was my life until about halfway through college. But it was really kind of, I look back and it was kind of academics and music until I found cycling. And then everything else kind of slowly went to the wayside. Obviously, academics still kind of persisted as I continued into college, but cycling was my absolute passion.
So halfway through college, I mean, was there a reason it became not a part of your life, or what happened?
Yeah. So there's several different things, Tyler. So cycling is a tough sport. And because it's such a demanding sport on the body, drugs have a massive impact, when people take them. And I think everybody knows the story about drugs and cycling. The thing is, there's drugs in every professional sport. And you have to kind of have your head in the sand or head somewhere else if you think that they're not running rampant in leagues that don't test, for instance. And you guys can go figure out what those leagues are. The bottom line is cheaters are everywhere. But I had friends that were better than me going to Europe. They would come back, tell me these stories about people sticking needles in their arms, sticking needles elsewhere. And I'm like, I always said, I'm not good enough to do drugs. Like, I'm not going to be a crappy pro that's on drugs. Like,
right.
And you might say, well, wait a minute, you would have done drugs if you were going to be a good pro. And I don't know. I was fortunate that I didn't have to make that decision. But I do know that a lot of people that were put in that position between living their dream and throwing their dream away because they weren't going to do something that everybody else was doing, they did it, or they threw their dream away, and they've been very bitter about it. So that was happening. I was in school. My best friend passed away between my freshman and sophomore years. And my sophomore year, I came back to school. I didn't want to be an engineer. I was in engineering school. I wasn't happy riding and racing my bike. And I thought, man, there's more to life than this. And when I was winning races, when I was all-American cyclist, and when my team went pro, I decided I was not going to go pro, and that there was more to life than just riding my bike around 10, 20, 30 hours a week.
Well, good for you, first of all. And it's actually really interesting to think about folks that may be at the top of their game who have to make that decision, or, are certainly much more pressured to make that decision. And so it's interesting to kind of get into the mind of where that all originates. And obviously it's probably more pervasive than many of us know, but that's not really the scope of this conversation or this podcast. But it is interesting to consider what really happens in society across all these different silos. But you have a really interesting background, interesting story. So you mentioned that you were not really interested in going into engineering at that point. You were studying it. And so then you had to make a decision to kind of pivot, and your whole identity then needed to be shifted. Or I'm assuming that you went through quite a bit of challenge there to kind of change course.
I was floating around without direction, that's for sure. Because here I am, what was my life for my entire kind of adult existence from 14 to 20. I gave up cycling. My peer group, my friends, most were cyclists. I go to class. I don't relate to these people that are, in my mind, a lot smarter than me. And fortunately, I met some great friends and was able to get through the engineering program and stuck with it. But what I found was investing. And the reason is I wanted to live every day to the most. And it's hard. This is where the balance that comes in, like we talked about at the beginning of the show here. But you need money. You need financial freedom to do that. And that dawned on me very early on. And I said, okay, if I'm going to honor my life that I still have and my friend's life that he doesn't have, I need to have money and the ability, the financial means to go do these things. And that's what really drove my interest in investing, and what ultimately led me to real estate.
So obviously you had this huge challenge. Your best friend passed away. That kind of, I'm sure, caused you to ponder the meaning of life and impact and legacy and all this kind of stuff, which gave you this ability to say, all right, well, how am I going to shift my identity? And by the way, I think that so many people listening will either resonate with, these trials and tribulations of their life, and to say, you know what, they've had these moments in life that have kind of really caused them to step back and say, man, who am I? What am I all about? What is this all about? What's the purpose of all of this? And I think that's why a lot of us get into this business or becoming investors or entrepreneurs, to say, well, what's my purpose? Like, there's a bigger reason for me being here. And obviously I can optimize and maximize my talents and utilize this vehicle and this lane towards making that happen. So talk to me about that. I mean, obviously now the thought comes in your mind of, all right, well, I can do this through investing. Was your first step real estate, and you're like, hey, real estate could be my avenue? Or were there many other thoughts that were going through your mind at the time?
Yeah. So first off, I think when you lose somebody like I did, you realize, especially at a young age, and there's data to back this up. Malcolm Gladwell writes about it. He wrote Outliers, but you realize time's not finite. When you realize time's not finite, you realize the value of every day is humongous. It's huge, right? If I told you had 10 days left to live, your view on life and your actions would change massively. Okay. Yeah. So, that's the thing. I think that, if you wake up, if you're given the gift of life, if you're listening to this podcast, I mean, shoot, if you work out, Like the ability to work out, recreate, and exercise for leisure and fun. That's something that very, 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 very few people do. Okay. So you're very fortunate if you're in those categories. If you're making a lot of money enough to be an accredited investor, man, you are in rarefied air. So you have to appreciate that. Once you have that level and you say, okay, kind of where do I go from here? And kind of as I went through this process in my mind, it's like, all right, I've been given this gift. Now, what do I do with it? I said, okay, need financial independence. I turned to the stock market. This is in the late 90s, man. It was ripping. I started day trading. I was making like $5,000 a month as a junior in college. I was like, got a girlfriend. I got I bought my first townhouse, but I wasn't sleeping. And I was like laying in bed at 3 a.m. one morning. And I was like, there's got to be a better way than this. Cause I want it all, right? I want like lifestyle and everything. And I thought, okay, so I started to research more on the real estate side. And what I found was the ability to leverage, control appreciation, as well as, negotiate prices. I'm like, this is more my speed. So in my process of getting my MBA in portfolio management, reading 250 some books on finances and investing, I honed in on real estate. And that's really how I built my initial plan, which was, buy enough properties, create $10,000 a month in income after expenses, before debt service, but after expenses. And then let's just go get a job, Chris, where I can make enough money to continue to invest, pay off these mortgages. And then 10 grand a month, I'm free. And that was the original plan that I put together. I wanted a plan with, and I want to expand on this, but I wanted a plan with a fair amount of certainty and a timeline.
Okay, so a fair amount of certainty and a timeline. So let's come back to that. So the tactic and the strategy in the beginning was the outcome was 10,000 a month, right? And so that was to be financially free, or however you want to describe that, right? And so were the tactics to get a get a career in medical device sales, or how did that work? And you were leveraging that income towards purchasing properties, or how did that work?
Yeah, so I bought my first 2 properties in college. I might even bought my 3rd property. They give anybody a loan back then, Yeah. I could they'd take my pulse and they'd be like, all right, how much do you want for this property? But yeah, I wasn't even making real money by the time I'd bought enough properties to get to that point. But really the med device industry was something that I was introduced to and that I found where I could make enough money to be accredited and ultimately pay off those, millions of dollars of mortgages that I'd accumulated at that point.
So you were buying houses in college, and then shortly thereafter, the same thing. Were you still buying single family houses, or are you buying other types of properties? Because I know you've got a wide range of experience, but the early times, Was that mostly single families?
Just single family. Yep. Initially, okay. Yeah, for the first 10 years, actually closer to 10, 12 years was all 100% single family.
Got it. And pretty straightforward in terms of, rent, expenses, debt, and let's get to that 10,000 number. So ultimately, how long did it take you to get to the 10,000 number?
It took me, I was able by 25, I had enough properties that I had $10,000 a month after expenses coming in.
Love it. Okay. And so then from there, I would imagine you're looking around and you're saying, all right, horizon has been met. Now what's the new horizon? So where was your focus from there?
Yeah. So remember that was before debt service. So then I was like, all right, pay down the mortgages. Right. So like the snowball effects, I'm like, all right, start paying these down. Well, then I'm working. So now I'm like, all right, I kind of have that plan in place. Right, Tyler. So I was like, okay, now I just have to make as much money as possible, essentially. So I put my head down then from age 25 till I had my second son. I was probably about 32. And at that point, I kind of finally picked my head up because I'd hit a nice stride in my career. I was accredited. I had options to other investments out there, but I wasn't doing very well with those properties I bought a decade before. What I realized was you make money really slow with single family.
Right.
And then we went through like the Great Recession and talk about a roller coaster ride. It was, talk about it in my book, like going through this roller coaster. It's like, that's just not cool. It's almost as bad as, the stock market was in the 90s. I'm like, what the hell? So I learned from that as well. I also learned about real estate cycles during that period. So I had my head down, and during that period, right after I picked my head up, I was talking to somebody at a meeting with my wife, and he mentioned commercial real estate, more specifically apartments, multifamily. I looked into it, and that's when I kind of saw the light. And that's why in my book I say the holy grail of real estate. And what I learned was multifamily, commercial real estate, but specifically multifamily, gave me better returns passively. So I'm already like, okay, I'm starting to fall in love here, because this is a guy working 60, 80 plus hours a week. It's like, I don't need to actively manage this stuff if I don't have to. Oh, and by the way, you can control the appreciation and get better tax benefits than you're getting now. So
Right.
I when I found that out, I rapidly sold all of my single family properties and moved 100% of that money into commercial real estate. So the only single family properties we currently own is our primary residence, which also houses 2 Airbnbs on the same property.
I love that. And I'm in the exact same boat. And so I totally resonate with your process there. And, I'm also thinking like, I'm seeing your story and I'm envisioning your story and I'm trying to see it through the lens of the engineering mind, because even though you decided you weren't going to be an engineer, that engineer mind never left you. And so I'm imagining you're looking at multifamily properties, multifamily real estate and saying, you know what, not only does this make sense from an economies of scale perspective, from a return on investment perspective, in comparison to what you had been doing, but then you look at it and you said, I can scale this because I can systematize, I can create process, and just the nature of the asset allows me to do that. So am I understanding that correctly? Am I making the correct assumption there?
You are, and I can. There's kind of a philosophy I've built around this, which I'm happy to share.
Please.
But yeah, the engineering side of me, I did not like engineering, frankly, but I really enjoy the engineering process, the process of going through assumptions, identifying a problem and solving the problem, and then iterating. That's a word you hear like a lot in programming and engineering, which is go through it, see what result you get, improve upon it, and then do it again, make it better. Like it's Kaizen. They talk about it in Japanese culture, all these things, right? And this is how you get better at operating multifamily, at operating commercial deals, and ultimately create more value. Okay, it's very important. But here's what I want to talk about, Tyler. So I'm maybe I'm a bit of a contrarian. All right, like I got educated as a portfolio manager in finance. I didn't go work on Wall Street. I didn't become a financial advisor. I said, no, wait, I want to put a ton of money into whole life insurance and buy a bunch of income producing properties. Cause you know what? I want to be like the ultra rich. I don't want to be like the Dave Ramsey disciples that are like, hey, I'm worth $1 million and I don't have any debt and I get to retire at 65. That's great if you're poor, but if you're listening to the show, you're probably not that person. All right. Here's where I think we're doing young people a disservice. First off, we're not educating them on how to figure out the return on college. I just put a tool together. It's on my website. Go to nextlevelincome.com/kids. 5 steps on how to teach your kids about money. Teach them to be money pros. Okay. 5 steps to be money pros. And the last one is teach them how to identify the ROI on college. Okay. If you don't understand it, there's a great article in there and you can start to educate yourself to have that discussion with kids. The other thing is we tell young people, hey, go out, take lots of risk, do it when you're young, because you can always recover when you're older. The problem is it's kind of like baseball. Okay. I love Moneyball. I love Michael Lewis. I think he's a great author. I love his movies. I love his books. I've read almost all of them, but guys that hit a lot of home runs, it's exciting, but they strike out a lot. What they figured out in Moneyball was you want to hit singles, doubles, triples. You want to get people on base and you want to score runs, right? That's what wins World Series. And by the way, I just took my boys to watch the Braves win the World Series here a couple of weeks ago. And that was my first love as a sport. But little aside here. So I said, well, okay, I'm starting to think about this process and look at returns and volatility in the stock market. And what I realized was I wanted certainty. Because if I knew I had $10,000 a month coming in passive income at the time I was 30, 35, well, how much risk can you take if you don't have to work ever again? You don't need any more money. A lot of risk. I think we'd be better served if we taught our youth how to develop a plan to achieve financial independence by focusing on building passive income streams from real estate, from businesses, from other endeavors. Then once you have that security, take risk. Okay. I think there's a lot of value in that. Now, I love the Elon Musks and the Bill Gates and the Steve Jobs and the Mark Zuckerbergs out there that, come up with these ideas and people are always going to do that. But I think for the vast majority of people, going to college without, knowing what you should do with your life or what you're going to study, taking huge risks, spending a lot of money, losing a lot of money, in the stock market or in other ventures. You know what? I can invest $100,000 in Bitcoin now or some sort of speculative venture because it's okay if I lose that money. I don't plan on it. I don't want to, but I can do that now. If I did it with my first 100 and I lost that, I had to build up the next 100 and I did it again, lost it again. And now I'm 10 years down the road and I have nothing to show for it. Well, now it takes a lot of time to make up for that because you've lost the time value of money. And that's something that we just don't calculate.
Man, hey guys, just a quick word from our sponsor, then we'll be right back to the show. This episode of Elevate is brought to you by CF Capital, a national real estate investment firm founded by myself and my business partner, Brian Flaherty. CF Capital's mission is to provide property investment and asset management solutions to help investors like you maximize their returns by investing in high value multifamily communities. If you are looking for risk adjusted alternative investments in quality apartment communities, are seeking tax optimized cash flow with appreciation upside without all the hassles of management, you might benefit from learning more about investing alongside our team. You're invited to reach out and learn more about how you can invest with us by visiting cfcapllc.com. We're also currently offering a free ebook called The Bottom Line, 10 ways to increase cash flow in an apartment complex. Whether you're a new or experienced investor, we're confident you'll find massive value in this resource. So go get your free copy today at cfcapllc.com. And now please enjoy the rest of the show. Real quick comment. I mean, I was just actually literally speaking to a friend of mine she's actually a younger girl. She's in college and she's about to graduate a major university. I'm not going to mention the name of the university, but her mother is a single mother. She's still working. She's been working for years and years and years, just to the bone. I mean, unbelievable. And, middle income sort of career. And she's just pouring so much money into this university. And so I'm asking this girl who graduates in a few months, and I'm like, hey, what's next? What are you going to do now? No clue. I mean, no clue. And you think about the ROI of that. I mean, it's very sad. And so financial education to me is to me is the most important. Like, we have to be financially literate. We have to understand what's the trade. Is the trade worth it? Ultimately, to me, that's the most basic question, whether it's time, money, energy, resources, whatever. And so thinking about that, I think it's such a base level question to say, all right, well, is this worth it? And so for you, what you've identified is, hey, let's ask those type of first principle thinking type of questions and question and be a little bit contrarian and say, all right, well, now let's structure our life differently. I agree, man. I think that the world has taught most people how to be average, how to be mediocre, how to, not make mistakes. It's like playing to lose. Instead, what we're trying to do is play to win. You talked about, hey, I want to be ultra rich. Why not? Right. I mean, I don't want to just be, the next door millionaire. Like, let's go big. So that's kind of what your thought process is too. So expand upon that.
Yeah. So again, and listen, if you're listening and you're like, this is too much, I'm too late in life, whatever it might be, it's never too late to learn what people that are better than you are doing in an area. Right. So whether it was when I was a cyclist and I'd study, the best cyclists out there, the training methods, or whether, I started out, I looked and said, like, what are the best investors doing? And there's people worth way, 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 way more than me, and, they take a lot of risk potentially, and they've done some things. So my way is not the only way. But again, the engineering thing, we need to question the assumptions, right? And I looked at it, I'm like, this doesn't make sense to me, a lot of these things, right? And once you build wealth predictably, if you do it early in life, if you're in your 30s and you're financially independent, which I think everybody has the capacity to do, even if it takes a little longer, add 5 or 10 years to that, 40, 50. If you're 50, I'm planning to live to 120. Figure out how to be healthy, focus on your health, focus on your financial independence. And then as you have that, have that income coming, now you can say, okay, how do I create a legacy for my family, right? So once you have the passive income portion, once you have that financial security, then you focus on the legacy portion for your family. And that's the second piece, right? That lasting legacy, the financial education, which is why we have Next Level Income, because nextlevelincome.com helps teach you all of these components. And then you say, okay, how do I ensure that my children have the knowledge and also the financial means? And we do that. A lot of that is through not only our investing, but our life insurance strategies that we build around this. Again, just like the ultra rich. And then what else the ultra rich do? They do take a portion of their portfolio and they put it into areas that are more speculative. because they can. So if you take 80% of your portfolio and you have it in very secure areas like whole life insurance, like commercial real estate, maybe, like some bonds, the stock market, some stuff like that, you can bet on things like early growth companies, like venture capital, like cryptocurrencies, like different ventures, small businesses, these sorts of things. So it's called the barbell strategy. If you've heard of Nassim Taleb, he wrote The Black Swan.
Yep.
He talks about this as well. Put the majority of your portfolio, like 80, 90% of it, into very secure areas, things like multifamily real estate that are institutional quality. Then you can go big on the other side of things, or you can start a company. Like, you can think about that as part of those things. I think, we need to teach kids, as you mentioned, financially, but then also teach them how to be entrepreneurs, not just to be a cog in the wheel of somebody else's business.
I totally agree. Here's another baseline question when it comes down to that. It's, instead of I can't afford that, it's how can I afford that?
Yes,
and
exactly.
That changes everything. It unlocks everything. It puts you in the world of possibilities. Yeah. You mentioned Nassim Taleb. I'm reading actually right now, Anti-Fragile. It is
awesome book.
Amazing. It's his best work.
Awesome it's so good.
And I just highly recommend.
Do you even deadlift, bro? I think that's his quote. He's got a quote.
I know.
So
it's hilarious.
Yeah. If you're listening and you don't deadlift, then you gotta read this book.
Yes, that's so good. We'll put a link in the show notes. Of course, we'll put a link in the show notes. That's where you can find Chris's book as well. We'll talk about where you can find that. But Chris, this is so good because we're building the foundation and the thought process and the philosophy, because now we can say, all right, well, if that's the philosophy, now if we're going to go this barbell strategy, right? Let's just say we're building and strengthening the 80 to 90%, right? The stable, let's say multifamily. We're talking about multifamily to a large degree. When you look at a deal, you were talking about iterating. You were talking about improving, Kaizen. I mean, that philosophy is important not only for business, but also for life, obviously, and how you're developing as an individual. But when you're looking at a system or a process, walk us through your thought process. How do you look at something to say, all right, it's time to iterate, it's time to improve? Is it when it's broken, or is it when it's not performing optimally? Or give us a sense of how do you look at that?
Yeah, let me use a real life example that's clear and present right in front of us right now. And it might be a little controversial. You might be listening and saying, well, hey, this is like, I disagree with you. That's fine. Disagree, agree, whatever it may be. I'm going to walk through this process with COVID. Okay. So I've been reading about COVID since the end of 2019, before it hit our shores. Well, probably hit our shores before then, in my opinion. But anyway, I start reading about this. I'm like, something's crazy here, right? Like something's not right. I start to read about it. COVID hits. People are making assumptions. They're saying this number of people are going to die. I read as much as I could, and I found the Diamond Princess, I think was the name of the cruise ship, that there was an outbreak of COVID. And I said, okay, I'm going to assume that the general population is probably a bit healthier than the population that goes on a cruise. And if you like cruises, no offense to you, but this is
that is so rude, but probably true.
But hey, if people, most people that go on cruises, this is like in the winter, early part of the year, you're sedentary, you eat a lot of food, you drink a lot of alcohol. Like these are good, fun things to do in every once in a while. But a cruise ship, not the most healthiest of environments. And oh, by the way, you're closed in, right? Breathing the same air in a lot of cases. You're going to the buffets together. You're in these areas. I'm thinking that's probably a really bad place to be during the middle of a respiratory viral outbreak. Okay. So I looked at the numbers in that and I said, okay, let's see what the assumptions that we're making about COVID are. And then let's see how the actual numbers are coming out of this. I see that the numbers on this cruise ship are like half of the rates. So I extrapolated from that and I said, all right, I'm not as worried about COVID as I was originally. However, I took all the precautions. I bought PPE for our family, masks, antivirals, all kinds of stuff, just, to be safe, but I kept following it. So again, I assume the worst. And then I start to say, hang on a second, I'm overly cautious. I can relax a little bit, but then I say, okay, what are the risk factors? So I kept going after the data and saying, all right, because people start talking about the Spanish flu. Spanish flu killed a disproportionate number of young people. COVID's not like that. It's the opposite. It's the inverse. It kills a disproportionate number of older people for different reasons. And it has to do with the ACE kind of receptor system in the body. I'm not going to go into that because I'm a real hyper nerd, right? But the bottom line is I kept questioning like what we were seeing in public. And then I said, all right, well, do mass work, right? And then I started looking at this data and I was like, okay, I started to question whether or not mass work, because remember, I was the first guy to go out and buy N95 masks for my family. I had employees. We were fitted them with N95 masks. I was still working in the medical industry at the time. And then I found out that my assumptions were incorrect on that. So I started operating a little bit differently. It seemed like, and then I started saying, well, hang on, what are we focused on as a society? I said, hey, family, we need to take vitamin D. We need to get outside. We need to exercise. We need to keep ourselves as healthy as possible. Because people are focusing on, these external things that we can do. Well, staying inside, not working out, not getting vitamin D, it's not the most healthy thing that you can do, right? Then finally the vaccines came, and I'm very thankful. I'm like, okay, this is going to help us break out of this thing. But I kept following the data and seeing like what's the best vaccine that we take. Now we're finding out the vaccines are only about 50% effective at 6 months. So we can't have this false sense of hope that the vaccines are going to save us forever. I got COVID. I wear what's called an Oura ring, and I participated in a study. This Oura ring in the study showed 48, 72-hour predictability of COVID before you get symptoms. It gave me 48-hour heads up. I was able to isolate, start treatment ahead of time. So again, I continued to question from the beginning. When I assumed the worst, again, I was the first person to go out and buy all the stuff to protect my family. I got a lot more optimistic. We had the vaccines come out. I was optimistic, but then saw that they weren't a cure-all. I focused on other things like this technology, the Oura ring. And what I did was when I looked at my app and it showed me that I had some biometric markers that were elevated, I went and got tested for COVID because I was supposed to interact with my 70 and 72-year-old in-laws the next day. I saved myself from interacting with them because I continued to analyze, question assumptions, iterate, improve things in my own situation. It also allowed me to recover in 48 hours, I believe, because I was able to treat and detect it. And you can apply the same process of questioning assumptions, continuing to educate, improve the process that you go through in any area of your life or investing. And I think this applies in a tremendous way to multifamily investing.
So are there any examples of things that you've had to analyze, question assumptions, improve, obviously educate and improve in your business? Is there anything in particular within a property or within your portfolio that you've had to do a similar sort of process on recently?
I have several examples, but let's go back. So let's kind of continue the theme of COVID, right? So we were investing mostly in workforce housing pre-COVID. I mentioned earlier on, I kind of teased it. I said I learned about cycles. There's an awesome book called The Secret Life of Real Estate and Banking by Phil Anderson. And he talks about the 19-year cycle in real estate. And I was really nervous coming into 2020. And you can listen to my interviews because I was like, I think we're setting up for something here. And I didn't predict COVID. I wish I did. I would have made, we wouldn't be talking. I'd be, counting the extra couple zeros in my bank account.
We'd still be talking. Let's be honest. Come on.
Okay. We probably would. But, so I knew we were setting up for something. So what we did is we moved out of that workforce housing and started to buy higher quality properties. So these were properties that were newer, that had, instead of having average rents between like $800 to $1,000, maybe $1,000 to $1,500 a month in rents, that we could move higher, because we felt that would be more stable going into a rough economy. So we did that, and we continue to move in that area. And again, I love multifamily. I loved workforce housing, but I had to question, were the assumptions I made 5 years before as I moved into this space the same? And they were not. We were at a different point in the economic cycle. And it was that question that moved us in a different direction. That portfolio that we acquired pre-2020 had a 10%, not vacancy, but 10% default rate. So collections were only about 90%, whereas we averaged 98% in the new portfolio that we built after that. So that's a massive, massive difference in performance. It's the difference between distributions to investors and no distributions to investors.
Yeah, no question. Yeah. And it's like, it's an iteration for the construction of your portfolio across the board,
Correct.
right? So you
Correct.
question the assumption of the thought process and the viability of that strategy moving forward. Yeah. And the other thing that I think is important in this business is to kind of read the tea leaves and to anticipate what's next, right? So you're not only you're kind of reacting in real time, but you're also being proactive ahead of time. Yeah. Right. So how are you looking at like what's continuing to unfold? Because we're always in unfolding events. So what are you seeing? I mean, like, how does this iterate? How do you iterate moving forward, whether it's just the overall strategy or just operations or what have you? I mean, is there any other things that you're anticipating right now?
Yes. Here's the big one. So first off, we added mobile homes to our portfolio in the last year because I think they offer a more durable option when the economy turns down. We're doing a small development deal, 15 lot development deal outside of Asheville here because there's a housing shortage, and we're positioning ourselves in a market that has a nice profit margin, but also a shortage there. But here's what I'm looking at for the next decade: senior housing. So nobody's really talking about this. Well, I haven't heard a lot of people talking about this right now, Tyler. But here's the thing: the same demographic trends that led us to the stock market boom in the 80s and 90s, to the housing boom in the 80s and 90s, even to some of the multifamily boom now, because you have a lot of these baby boomers that are retiring. We are setting up for a massive problem in the senior housing space. And that's where I'm starting to build my knowledge base. And I'm pulling up, trying to pull up some charts here from my book. And this is kind of a good one here, but you can kind of see how this is not going to show up. You can see that. Yeah,
if you're on
here.
YouTube, you'll be able to see this. Yeah.
Yeah. And I wrote a blog on it. If you search for senior housing on my blog, you can find it there. But the bottom line is we have a massive demographic wave coming, and we're going to have a massive shortage in the senior housing area. So look, I like to make bets. I like to make 10-year bets on trends. Okay. That's going back to what we talked about before. I said, hey, look, I know that the baby boomers are going to need surgery for the next 20 years. I'm going to build my career around this. I know that we're going to have a housing shortage for the next 10 years, 20 years even, and we're going to have this demand for multifamily. I'm going to bet on multifamily. I think we're setting up for the same thing in the senior housing space. And the next 10 years, it's a good 10 to 20 years is a good bet to place in that area.
I love that. So making 10-year bets based on trends. I want to ask you a couple of questions. I want to circle back on a couple of the iterations that a part of your strategy. You mentioned mobile homes. It's interesting that you took the workforce housing to a higher quality in the multifamily space, and you're also supplementing sort of you're almost hedging in the mobile home space on sort of more affordable, yet perhaps what you see as less delinquency, perhaps, and maybe we can table that and come back to it. And so that's really interesting. And I think that's fascinating. I think it's a lot that the listener should to take into account when they're considering their own adjustments that they're making. But you're talking about senior housing. Where are you finding your data to be most insightful, or what sources do you look at closely as far as demographics to make these bets?
Yeah, I mean, so
just Census Bureau stuff, or I mean, what are you looking at?
Yeah, and again, I mean, I rely on multiple. Like, I mean, I'd have to go and like literally read down a list of all the sites I read on a daily basis for all kinds of different stuff. But yeah, so for multifamily, for instance, and you look at the census data, like the multifamily, what is it? The Multifamily Housing Council, I believe, is what it is. I mean, source in my book, U.S. Census, Fannie Mae, is where we pulled some of this data. U.S. Census Bureau, ACS, so a lot of this stuff, it's just census data, and then you can extrapolate from it. There's some different authors that I followed, and some are kind of controversial, but I look at, I mentioned Phil Anderson. I look to him for like real estate trends. Harry S. Dent, who I wouldn't necessarily depend on for like market predictions, but if you look at his actual demographic data and what he studies there, I think is really good. And again, so I'll look at somebody like that, and they may make a broad suggestion, say, hey, look at senior housing, or look at recreational vehicles or something like that. And then I'll go and investigate that space based on that larger thing.
Yeah.
When it comes to, kind of moving out of the workforce housing, which I think it's a great arena, but it's overcrowded. I think cap rates have gotten pressed down. I think you have to be conscious of the risk adjusted return, and the risk adjusted returns have shrunk in that space. I still think I want an affordable housing option in my portfolio, but I want one that performs better. And the fact of the matter is there's not as many players in the mobile home space. And when the economy turns down, it does perform better than some of these lower income multifamily options. And the reason is there's not a lot below that. If somebody's paying $300 a month in lot rent, they can't, to spend $5,000 to move their home. They're probably not going to do that to save 10, 25, even $50. It doesn't make a lot of sense at that price point. There's also a lot more meat on the bone. Like the improvements we make in the properties we buy, Tyler, are massive. Like you wouldn't even recognize some of these properties. So there's just a really high upside from, the quality that we can change in these properties. And I've been, one of my partners, he's like, "Hey, did you ever step foot in a mobile home park?" This is our first tour together. And when I was in high school, we used to do service projects into Appalachian Service Project is what it was called. And we worked, most of these people lived in mobile homes, and, we'd make a lot of improvements. And it's really incredible what you can do in a week with some resources to a person's, home that they live in. So to be able to do that at scale into some of these communities and improve the quality of life of these individuals for not a lot of money, and great returns for investors, frankly, it's a great space to be in.
I love that. And our company's philosophy is that we can elevate communities together. We're not in the mobile home space. We are multifamily, but I can see how that would be extremely relevant in what you're talking about, because everybody wins when you do the right thing. And so thinking about just the composition of your portfolio and your strategies, I feel like it's set up for success, whether we continue this bull market, we have a bear market, we have, significant challenges on the horizon. Look, here's the thing. Nassim Taleb, the black swan, anything is possible, right? We've been talking about a lot of, what to consider when, growing your portfolio as an investor. What do you think is on the horizon? I mean, I try to ask as many smart people as I can, but there's no crystal ball, but I'd love to hear, 5-10 years in the future. I mean, are you anticipating, I think in my opinion, I think it's smart to anticipate that we will have a cycle, but it almost seems in many regards, people are like, look, we don't have to have cycles anymore. I mean, I'm not a believer of that at all, but I'd love to hear your thoughts.
Yeah. So, look, you can go back in this country to the 1850s and the cycles are there. Okay. And they're driven by underlying demographic trends. So people say 17 years, some people say 20 years. I think it's probably more like approximately 18.6 years, but I'm just 18 to 19 years seems to be a pretty good range. And there's a few people I follow that kind of track these trends. And by the way, different like commercial office and industrial and residential and multifamily and what market you in, they move at different times. So we have to be conscious of these things. But in the overall housing market, okay, we just passed what I would call the mid-cycle point. Okay, so we started the new cycle here kind of at the beginning of this decade. We were coming out of it around 2012. So that sets us up for 2030-ish to finish this cycle, somewhere around there, maybe the end of this decade. But you have to be conscious that the last 4 years or so of the cycle are a downturn. So if you want to hedge your bets a little bit, we're 2021. I'm saying we probably have 3 to 5 years, 3 to 5 years left in this cycle coming out of this mid-cycle slowdown. History rhymes, but it doesn't repeat itself. So what is it going to look like? When is it going to happen? When's the stock market going to crash? When's the housing market going to crash? Stock market probably comes down before the housing market does. I'm talking about the housing market. Okay. So the stock market is a future seer. It looks into the future and people make future bets in the stock market. They look at future profits, okay, to value those things. So if it starts to drop, that means the economy is going to start to drop in the future. So that's something to consider as well if you're looking at this. But the underlying issue is that we underbuilt for over a decade. We have the biggest generation in history with the millennials and the baby boomers, the biggest generation before them, both vying for the same properties right now. Gen Z, I just read a study, Gen Z, which they're just coming into their adult years now in their early 20s, 23, 24, 25. I had Hannah Williams, great Gen Z expert. She's 23 or 24 right now on my podcast. You should check that out.
Nice.
Only about 35% of Gen Z say that part of their dream is to own a home. 35%.
Wow.
Immigrants, which whether you agree or disagree with it politically or not, are streaming into this country. Immigrants rent in disproportionate numbers to people that are already here, 75% around about. So we have all of these things and not enough housing. So just a dumb person can look at this and say, wow, supply and demand, Econ 101, we got a problem here. And that's a reason why the housing market is on a tear. So I think we have a few more good years in this, but I think it's also, this is a good point, it's also a time to start stacking cash. We are putting massive amounts of money into our cash value life insurance policies. And I even talk on my website under our banking link, how you can utilize strategies that complement your real estate while at the same time building your cash stores so that when the next opportunity comes to buy at discounted rates, you're ready.
Chris, I love the way that you think, man. And I think it's an invitation for the listener to study, to, recognize what's happened over history and recognize, well, what may be rhyming about this cycle and understand really the dynamics of the cycle, what causes certain events to occur, and make plans and act and behave in certain ways to maximize your own financial freedom and your own impact in so many different ways. So Chris, this is awesome. Before I transition us into the rapid fire section of our podcast, I'd be remiss if I didn't ask you, what role does mindset play in your success?
It's core. It's at the base of everything. And, whether it was, I kind of mentioned in the beginning, maybe I'm just built to suffer, if you know you're running a marathon, and you're like, okay, you can get through it. You mile by mile, you tick through it. Your brain, your body, it's amazing what we can endure if you know what you're going through. All right. So mindset is key to anything. As you build a plan, whatever I said today, I'm definitely have said something that was wrong. And you need to be able to say, okay, I'm going to course correct. I'm going to move forward, but this is where I'm going. When you get in your car and you put your destination in Google Maps and there's an accident and Google takes you on a detour, you don't freak out and say, I'm not going the place I thought I was going. You say, okay, Google, they're going to take me there. I think maybe not Apple.
Yeah. Recalculate.
Maps, yeah. You just course correct and figure that out. The most important thing is Google still has that same destination in there that you put in. You've got to keep your mind on the goal. You've got to keep your mind secure and solid on where you're going on the horizon. And even if you get pushed off course, you've got to get up. You've got to figure out what you could do differently next time. And then you got to keep going, keep taking massive action.
Man, I love that. And it's really interesting. Actually, I'll tell a quick story. Before I got on this podcast, I was just looking at my Apple Watch, my stats, right? I always, how many calories have I burned today? And what's my exercise minutes and stand and all this stuff, and close my rings. I always going to close the rings. And I have a few friends who are kind of my friends on the Apple Watch thing. And I always see like how they're doing and what their goals are. And there's various different goals, right? And so you can set a goal of a move goal per day and so forth. And what I find, and if you look at the trends, you can actually look at everyone's trends over the past however long you've been connected with them on this app. And what you see is that people tend to go around that baseline of what their goal is. And so if I have a higher goal of a higher move goal, I tend to be in that area. And so the question is, what is your goal? Are you aiming low? Are you aiming high? And I think that there's a vast difference in the outcomes that we get, because when we plant that goal in our mind, that's almost the most important decision. And now all of our decisions can then, and our behavior can follow. So I'm a big believer in mindset. So I appreciate you answering that for me.
Oh, it's huge. And here's a shortcut. So if you're listening, it's way easier to 10x your goal than to 2x your goal. And here's why. Dan Sullivan says this in Strategic Coach, which I'm a part of. If you have to 10x your goal, if you say, I'm going to go from 100,000 to $1 million a year, you've got to do things differently, right? If I say, I'm going to make 10% more next year, that you really don't have to do things differently. You can keep doing the same stuff. And the chances of you accomplishing much more aren't that high. When I was in business, when I was in sales, people say, hey, we want you to grow 5% next year. I'd say, I want to own 100% of the business. How about that? Like, that is how you change and grow massively.
It's so important, man. Chris, this is awesome. I want to transition into the rapid fire section of the podcast. It's called the Rare Air Questionnaire. We were talking about rarefied air earlier in the podcast, and being an accredited investor, reaching financial freedom, doing a lot of the things that we've talked about today. This is rare, but guess what? Rare is good, right? And rare, it's
Nobody wants
rare
to
to set a goal. It's rare to 10x. But you know what? We're not here to be average. We're here to do massive things. So with that said, I want to ask you a few questions. First of which, if you had to point to 2 or 3 of the most impactful books that you've read over the past few years, what would those be and why?
Yeah, I just mentioned this on another podcast. This is not a financial book. It's called Lifespan by David Sinclair. Just recently listened to a podcast with David Sinclair and Joe Rogan. It's great. Listen to that. Read his book. Again, if you haven't, I just reread this, The Secret Life of Real Estate and Banking by Phil Anderson. Fantastic book there. That's 2, and you can read my book for number 3. How about that? That's a cheater. That's a cheater answer.
Yeah. No, that's not a cheater answer at all, but we'll put links in the show notes as to where the listeners can find both of those books. I definitely recommend Lifespan. I think it's interesting. You've mentioned a couple times in the podcast, hey, your goal is to live to 120, right? You said
122 actually. Yeah. But
122. Yeah. So mine's 123. Because my favorite number is 23. So, all right. But it's interesting because you mentioned Dan Sullivan, and what Dan Sullivan says is the most fundamental thought in the human life, whether it's conscious or subconscious, most of the time it's subconscious, is how long are we going to live? How much longer do we have left? And you think about lifespan, you think about the technology and all these things, we have an opportunity to expand our health in our life. So anyway, go ahead.
That's great. His book, you can add this as your third. It's my Plan to Live to 156 by Dan Sullivan.
Mm-hmm.
That's a good one. That's all about mindset. All about mindset.
Love it.
Yeah.
We'll put links in the show notes as to where the listeners can find that book. We'll find Lifespan, Secret Life of Real Estate and Banking, and of course, Next Level Income. That's nextlevelincome.com/book. We'll put a link in the show notes. But Chris, tell me, what's the biggest way that you elevate your life on a daily basis?
I think it's gratitude. So, I think I was just talking to my son about this on the way to school the other day. You can either have a scarcity mindset or you can have an abundance mindset. And I think if you're grateful, if you're and I think Tony Robbins says this, but if you're in a place of gratefulness, you're feeling grateful, you're feeling love, you're feeling all these things, you crowd out everything else. Anxiety goes away, the hate goes away. If you start your day with a gratefulness practice, just wake up, get your coffee, whatever it is you do in the morning, sit down, take a few deep breaths, and think about 1, 2, 3 things that you're grateful for. You can write them down. You can not write them down. You can put them in your phone, whatever it is. But if you start there, I think you end up in a much more abundant place. And I would expand that into people that don't share that abundant mindset, that are scarce, that are fighting for scraps. You need to eliminate those people from your lives.
That is fundamental. And I highly recommend the listener re-listen to everything that Chris just said right there, because that is a game changer. And this is stuff that you can build on and scale on in so many different ways. So thank you for sharing that, Chris. What's the biggest way that you elevate others around you?
Yeah. So, Next Level Income was founded. nextlevelincome.com is an education platform. Everything on there is free. So I really, truly believe, as we mentioned, Tyler, that financial independence and financial education is something that we owe to the next generation, and that we can make massive changes in this country. Aside from the health area, which, I spent a lot of my life in the healthcare system, my expertise though is in the financial side. So improve your health. But what I do is, we started a financial literacy program here locally, but I try to impact a larger number of people online.
Chris, man, I want to acknowledge you for giving. I want to acknowledge you for, spreading education, truth, giving people an inspiration for reaching higher, because man, if we reach higher, then we can go higher. And absolutely. Giving people the tools, because you know what, there's a lot of people who take, but you're giving. And so I just want to acknowledge you for that. But Chris, thank you so much for being on Elevate. Thank you so much for being an amazing guest. Is there any parting thoughts or words of wisdom that you'd like to share with Elevate Nation today?
Oh man, Tyler, this has been great. Thank you for everything that you do. And again, no matter where you are today, wake up tomorrow, put yourself in a state of gratefulness, figure out your plan, and then take massive action. That will allow you to get where you want to be and achieve the dreams that you have in your life.
Boom. Drop the mic, my friend. The listeners can find Chris at nextlevelincome.com, or you can find Chris on LinkedIn at Next Level Income, also on Facebook, Instagram at The Next Level Income Show. Chris, is there anywhere else where the listeners can find you?
Probably right here in Asheville. So if you come to visit, look me up, check it out, and grab a cup of coffee or drink.
Love it. Love it, my friend. Chris, until next time, thanks again for being on the show, my friend.
It's been awesome. Thank you.
Elevate Nation, Chris Larson, dropping knowledge, dropping wisdom, and dropping investing iteration and composition knowledge so that you can take your financial freedom to the next level, so that you can take your goal setting to the next level, so you can take your future to the next level. This is next level stuff right here. So I'm just so grateful for this opportunity to share so much wisdom with Chris. And, in many ways, I honestly anticipated us talking about a lot of, structuring systems and processes, but what we're talking about really is thinking bigger. And we're thinking about how can we structure and systematize the way that we view the world and the way that we read data, the way that we behave, the way that we make decisions. And so to me, this is so valuable, so much more valuable than getting in the weeds on some, system or process. And so I hope that you found massive value from today's episode. I hope that you are now saying, you know what, I can iterate, I can change, I can grow, I can think bigger, I can do bigger, I can be bigger, and I can have financial freedom and so much more, because guess what? You can, and you should. You should. So if you're listening to this, that's the call for you, is to step up and to create your future. Don't be scared. Don't think small, because guess what? Those are choices. Both of those are choices. Be bold, be brave, and think big and go big, and let's go. So with all that said, I want to encourage you to discuss this with someone else. What was it? What were some of your takeaways? What was the top takeaway 2 or 3? Discuss those, because we learn more when we talk with someone else. And when we have discourse, when we disagree, if maybe you disagree with something, argue that point, and share this episode with a friend and let them know what was it that you got from this episode. Ultimately, of course, repetition is also the mother of all skills. So if you re-listen, you're going to learn twice as much. And with all that said, at the end of the day, the most important thing is to take massive action. So your takeaways need to become your reality. So take massive action. Until next time, Elevate Nation, thank you so much for tuning in, and we will see you next time.
Thank you for listening to Elevate. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to elevate your results by taking immediate action on what you learned. For more, visit elevatepod.com.